Thank you for joining me. I'm Alex and I want to talk about Intel today. Now, full disclosure, I had an AMD share that I made quite a bit of profit on, and I sold it for $30, and it's now over 90, I think, and it's going to the moon, and I'm not salty at all. It's fine. It's totally okay. So Intel makes processors, semiconductors, mostly consumer and server processors, also SSDs and some other stuff, but their main market is processors. Current price is $55.44, which gives them a market cap of $225 billion. Revenue $77.9 billion, earnings $20.9 billion. Revenue up 7-ish%, earnings basically the same, which gives them PE of 11 with a forward PE of about 12, which is, bad that it's going up, but 12 is nice. 12 is real nice. Dividend yield 2.3% with a payout ratio of 27%. Also not bad at all. You can definitely get better dividend yields, but not really with that kind of payout ratio these days. Total assets $153 billion, total liabilities $72 billion, which gives them a total stockholders' equity of $81 billion, which is nice. And that is a real nice balance sheet. I really like this balance sheet. So risk factors, obviously AMD. AMD kind of makes better processors, at least for the consumers right now, and AMD, as far as I know, also makes processors for Xbox and PS5. So AMD obviously gaining market share pretty quickly right now, and that is going to be a risk factor, being that, AMD finally has better processors for the first time in 20-ish years. Overall, I don't think that AMD really has gotten that market share yet, but obviously as long as they're going to be on top, they're going to be gaining in market share. So that's a huge risk factor. Everything else, like people moving towards risk processors like ARM, or Samsung has a processor, Apple making their own processor, those are obviously risk factors, but seems like at this time, that's a fairly minor issue. So I don't think the risk factors really changed that much, except for AMD making better processors. I didn't really see that coming. So for a growth investor, I don't think the growth of 7-ish% is going to be enough. For a dividend investor, the dividend is actually quite nice, especially with the current bond yields, but whole different issue. If you want a better dividend than this, I did IBM yesterday and they had 5.5%, obviously with a payout ratio of 106%, which is kind of a problem, but this payout ratio is pretty nice, and this company being reasonably stable, I definitely wouldn't blame anyone for investing in this. For a value investor, the balance sheet is just really nice. So balance sheet is nice, the PE is really nice, revenue growth of 7% is also nice, and the dividend being a nice bonus on top of that means I probably won't get around picking up a couple of shares myself. It's really hard to pass on a company that has such nice financials. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.